What's going on, everybody? Rob Taylor here from Team Taylor. And today we are talking about the different types of loans used to buy properties. So we'll start with the ones that give 100%. So that is VA, USDA. Then you have FHA and you have conventional. Those are the major loan types that we're going to discuss. So what does that mean? If someone is getting a VA loan, first of all, they're going to give you 100% of the value of the house, but you have to be in the military. So if you're not a military member, you're not going to get a VA loan. So that's very particular and specific. Next at 100% is USDA. USDA, generally, you have to be in a more rural setting. Some areas of the Capital District in upstate New York, there are some city areas there are some whole counties that are considered USDA, but that's going to be where the house is. And that, again, will be 100% financing, but it has to be, the house has to qualify. Then there's going to be FHA. They give you 97%-ish for the house value. So if it's 100,000, they're going to give you 97,000 of that in an example. So they give you almost, there's a little room between what it's worth and what they give you. That is going to be based on the house more and a buyer in that particular case would have to put some money in, but yet they don't have to put a lot of money in. So the bank or lender is going to give you most of the money. So that's people, first-time home buyers or buyers that don't have a lot of money to put down. They are going to be able to get in houses because of FHA, and they can make up that gap. Then there is conventional. Conventional, a lot of times they're putting down 20% or 10%, right? They have some 5% conventionals now, but you're going to have to be stronger credit-wise. You're going to have more of a solid payment history. You're going to have to put more of your own money down. A lot of times, again, people will put down more money, even 20%, so they don't have to pay PMI. Now, as a seller with people who are getting loans and you get offers with these different type of loan types, you need to know that as well. The other thing is going to be how the more money the bank gives you, right? So if it's 100%, they're going to be more strict. So VA, very strict, okay? USDA, more strict on the condition. I mean, it makes sense. If they're giving you all the money, the house can't have a lot of things potentially wrong with it because they might lose money if you never pay them as a buyer. That's what they're thinking. If the buyer never pays them, they need to make sure that house is pretty good so they could just sell it and maybe make their money back. If FHA, they're going to have a little leeway because they're not giving you all the money, right? A little leeway. So that house can have some things, but no peeling paint, no rotted wood. They're going to be pretty particular, but not as particular as, let's say, a VA loan. And then conventional. If you put down 10 or 20%, the bank will say, hey, if something happens and they don't pay us, I have room to sell the property here and still make money, but not lose money. So that is just a great way to think about what the differences is from a 30,000 foot view of the different loan types. You got USDA, VA, FHA, conventional. Okay. Now, conventional loan, again, they're going to be more lenient, the most lenient for the condition of the house. Hopefully that helps and you understand a little better about the different types of loans that can help people buy houses. Have a great day. Talk to you soon.